In the final targets in focus of this trading week, Dukascopy TV are returning to talk to Tony Nyman, the FX Fundamentals Manager from Informa Global Markets in London. Thanks very much for joining us, Tony. Tony, last time you spoke to us here at Dukascopy TV, you were discussing the trader's favourite, the euro-dollar. There is a lot of continuing uncertainty in Europe, a possible deal on bank recapitalisation, but nothing on the EFSF, and the deal deadline has been moved to Wednesday. Is this making it harder to forecast the euro-dollar, and is Europe still the main driver behind the pair?
We obviously have to make forecasts, and at the moment ours are in the 1 and 3 month 133, in the 6 month 130, and in the 12 month 125. These, as you can see, are fairly dollar bullish. Euro sentiment has been the main driver recently. It's been completely dominant, and the euro, surprisingly, throughout October, or certainly in the last few weeks, has put in a fairly impressive recovery, to the surprise of many. It's gained about 7-8% from the mid 131s to 139.14 Monday. As you say, there's been some positive noises from France and Germany about cooperation on bank capitalisation, etc. But still, there's nothing concrete from the EU leaders. And obviously, a top official like German Finance Minister Schäuble has already said, don't expect a cure-all fix at the October 23 summit. And we think some of the positive euro drive was on the hopes that finally some sort of deal would be coming.
Onto the euro-pound now. There was poor inflationary news from the UK this week. How are the markets dealing with the struggling UK economy, or is it still not the biggest story out there? And where do you predict this pair heading?
We've got 87.50 for the 1 month, 3 months, 86.67 for the 6 month, and 82.25 for the 12 months. As you say, the pound has largely been tracking the euro. When the euro goes up against the dollar, the cable will go up, but not as quickly. Euro sterling has been relatively bid during that time, and we don't really think UK data's been a driver. The CPI was concerning, obviously, but which obviously, you know, it talks maybe even stagflation worries, but BOE members and King and all the rest of the guys, they're fairly confident that 2012 is going to bring lower inflation. So we don't think data really is impacting at the moment. We think if you look back at the October meetings, at his last ever interest rate meeting, Trichet was less dovish than expected. He was intimating there was no ECB rate cuts on the horizon, while just an hour or so before, the BOE voted 9-0 to ease more and increased QE by another £75 billion. That has enabled euro sterling to maintain its underlying bid and test 88 on numerous occasions in the last few weeks. If that goes, then we could actually see 90 before year end.
Finally, Tony, turning to the US dollar, Canadian dollar, is this pair experiencing greater volatility because of the problems elsewhere in the world, or is it being pushed mainly by domestic factors? And where do you see this pair heading in the 1 month, 3 month and 12 month timeframes? We've
been surprised by the CAD's resilience in the last few weeks. Earlier in the month, if you remember, dollar CAD was trading around 105 and looking to go much higher. But this risk comeback, which has helped the euro move off its lows, has been a real boost for the Canadian dollar. And so in the last few weeks, as euro dollar goes towards 139, dollar CAD has slipped back towards parity again. Dollar CAD direction, we believe, as I said, will continue to be driven by risk sentiment, which further out the curve we still expect to be less than positive. And we think that's going to have fairly stark consequences for dollar CAD. Thanks very much, as always, for your time in speaking to us here at Dukascopy TV, Tony. Targets in Focus will return next week with more insight into currency projections. Until then, goodbye.